upon the breakout, gold's going to make a new all-time high.
Gold-backed ETFs seeing inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys to see all this going?
Makes your head spin.
All right, we have a special guest on the show today. We have the one and only Dave Kranzler, hedge fund manager, and one heck of a guy. Dave, welcome to the show, first of all.
Hey, thanks for having me on, Shane. It's a pleasure.
Awesome.
And it's a privilege to have you on, Dave. I've followed your stuff for a long time. I know you write a newsletter as well, which is very, very well respected, and I know that you are involved both sides of the market. In other words, you've got the physical side, the mining side, and something which I don't really concentrate on the mining side so much, but it is something that is so important. And I think might be interesting to grab your views on that as well. But you've just came out of a conference. Maybe can you tell us what? I mean, you had your ear to the ground, and as a newsletter writer, I'm sure that there'll be a lot of stuff that you're going to write about. But anything that stood out for you there, Dave?
Yeah, it was Silverfest 2 that was hosted by and put on by Chris Marcus of Arcadia Economics, and he's a total silver fiend. I don't even know if he owns any gold. I know he owns a lot of silver. And it was just, the podcasts were primarily roundtables with a lot of interesting people and a lot of people who know a lot about, the precious metal sector, who were involved in the precious metal sector. And then some junior mining companies that helped sponsor it, and all of the mining companies that presented at the conference, I either have buy recommendations on them or own them outright in my funds. So it was a good time, and it was really well done. I think it was well received.
Yeah, and you mentioned, I think you'd mentioned when we were talking before, that you saw some real divergences. So you've been actually experiencing, and you have contacts. I think Andy Sheckman, you were speaking to Andy Sheckman, who's very well respected, obviously, in the silver side as well. Was there anything there that you saw that they were talking about that was really interesting regarding silver? So let's stick to silver for a while, because I know Shane is. I met Shane, and all he ever talks about is silver. He was the largest. He was the largest private silver buyer that when I met him many years ago and became very good friends with. But silver is just such a lovely subject, and so if you've got any information on, and then I'll share some information that I got this week, and then maybe between us we'll come up with something that's of interest.
Hey, the whole thing's of interest. Are you kidding? I mean, when you look at the dispersion or the difference between, where the price of gold and silver are right now and where it would be if the regulators would enforce the regulations, and that would allow price discovery to come into the market. I mean, you can't have real price discovery when you've got, hundreds of times more paper gold and silver on the market than you do physical that can be delivered into those paper obligations. But just to kind of circle back in terms of the impression that I took away from the conference is that, I mean, as you guys know, I started in the sector 20 years ago, and for the first 10 or 12 years, people who were getting involved in the precious metals sector, they would love chasing the market when it was going higher, and then they'd get scared when the price would get hit, and they'd either sell their mining stocks, or a lot of people would even resell their gold and silver coins. So and the impression that I've been taking away over the last few years is that first of all, it's a wider audience now that is participating in investing in the entire sector, but also that, and you hear this from the coin dealers. Specifically, I heard it this past week from Andy Sheckman, but I've heard it from several, that whenever the market gets smashed like it does today, retail comes in and they buy more gold or silver, primarily silver. So, and that's what I think. I don't think retail in and of itself can break the market, but it's, as marginal buyers, they can certainly help push the price higher.
Yeah, and I suppose on the other side of things, I mean, you as a physical holder, whether it's gold or silver, it's the same thing. Are you forced to hedge those positions, Dave, along with everyone else? And obviously this gaming, there comes a point where you may have to hedge stuff and become part of this paper game.
I mean, I guess I'm probably guilty of being a permabull for the sector. And that's just because to me there's just an enormous arbitrage opportunity between what I think the intrinsic value for gold and silver is, which is much higher, versus where it trades, and is obviously the price setting mechanism is the derivatives market and the unallocated gold system on the LBMA. I mean, from time to time we've tried putting on hedges, and it's tough. It's really just a function of, if I get bearish on the market, or I think we're going to go through a correction, or a correction cycle, or a pullback, I'll try to raise cash by selling the mining stocks. But in terms of the physical gold and silver that we hold in a non-COMEX vault, we don't touch that, and we don't try to hedge it. And I mean, my biggest fear is if let's just say, we tried to sell some of that, or we wanted to sell some of that gold and silver, I'd be worried about maybe being able to replace it down the road at some point.
Very, very good answer. I mean, Dave, that makes total sense. That is exactly how I think I see things as well. I mean, that we're not in the paper. When you talk about physical here, you're talking about physical gold. I don't know of a single client in all the years that has ever sold. I mean, we're talking about wholesale side of things. We're talking about clients with a lot of bullion, gold and silver bullion. And yeah, okay, maybe some coin guys do. And I don't get involved with the coins. So maybe you do see some of the coin guys flip in and out. But I don't see a single ounce ever come up for sale. So it, much like you, I think I view it as an opportunity, because at least we're gifted with the view of the wholesale market, the real footprints, as opposed to this absolute hocus pocus of paper supply, which obviously we have to keep an eye on. But we look at it, I think we look at it in the same way. Hey, maybe this is the best opportunity. And where the hell, if I did sell it, would I replace it, is a very good point. At what point will we see a revaluation? There's so many things to consider.
One of the things that I found interesting was Andy Schechtman of Miles Franklin, and they've been around for a long time. You guys know him, and he was talking about, we're talking about signs that we'll see when we think the market's when they're finally going to be able to break the derivatives market. And one of the signs is you're going to see premiums on the coins, and even the bars widen out quite a bit, before there's some type of default on one of the major exchanges. And he said that silver, the premiums are really wide right now. Well, imagine if you're trying to game the market, and you expected a sell-off in the price of silver, and so you sell your silver in the high 20s, and now it's in the 23, 24 range, and you say, oh, maybe I better replace it. And all of a sudden you're paying what you received when you sold it, because the premiums have widened out, and that's a sign of scarcity, at least at the retail sector. And he said, we're not seeing premiums like that in gold yet. He said the dealers have plenty of gold, and so I said to him, I said, well, I don't, silver is what it is. I want to be the first phone call when a big hedge fund calls you up and says, sell me all the gold that you have, or as much gold as you can. And he said, well, I actually just got that phone call a few days ago, and it was a big investment management fund. I don't know if it was a hedge fund per se, and they gave him they said they're looking to buy, and I don't want to put the exact figure out there, but it had 8 zeros after it, worth of gold bullion coins. They didn't want bars for some reason. I'm not sure why. And when I thought about it afterwards, my guess is if it is a hedge fund, they're probably looking and saying, you're probably going to game the premium to some extent, because I mean, I said when I, kind of got up the curve and sort of at least thought I figured out what part of what was going on, and this was 15, 17 years ago, I said at some point we're going to see 100% premiums on gold, at least on the retail side on gold, because there's just going to be such a scarcity and there's going to be so much money that has been printed looking to buy physical gold and silver.
It makes total sense. And so, as you say, it's this whole, there's this disconnect. We're talking about this disconnect between the paper and the physical price and then the resulting, and you're talking about that there's going to be indicators like premium expansions, etc. But it was really interesting yesterday, and this is something I is so fresh in my mind because it's not out there yet. So obviously, we're very involved in the wholesale market, and yesterday, and this is a bank yesterday, and this is the interesting part, just as silver, pit opens, and what does silver do? Bang, down it goes. Today again, pit open, bang, down it goes. Just as it was going down yesterday, we were chasing some silver, and we got a phone call back to say, sorry, by the way, Standard Chartered, one of the market makers on the COMEX, has just come in and taken every single ounce, future, not just now, but they've bought every single ounce out of this is one big supply, and I won't name him right now, but it's a very big producer, and they've said they've bought everything, including forward production into 2022. Now, come on, this is while we see this tanking price, we see Standard Chartered, a COMEX market maker, out there buying spot gold, locking in the price in the spot gold market to buy everything in the future. Now, spoke to Argor and they said, and this is starting to feed back, spoke to Argor yesterday and they said, we're going to have no silver. We're going to have no silver next year. It's like, this is crazy. And this is crazy. And so when we look at this market and you see this price, but to me, I think I know what the game is. And I think we know what the game is that when we look at these short sells coming through on the COMEX, boom, 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 bang, 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 bang. And it obviously it forces out moving averages. You can trip out, where the long stops are, all the game. You also know then what you're going to do is also incentivize hedging, legitimate hedging, people going short to hedge positions, big funds out there having to do that. And then suddenly, but when we look at it, we go, hold on a minute, because the over-the-counter market is so opaque, and because it's still, silver, we reckon 500 to 1. Gold has been 100 to 1. Even Reserve Bank of India says gold 100 to 1, 92 to 1, they said.
Yeah, I remember that.
But 500 to 1 silver. So what we're seeing we're seeing unrealized, these guys are out in the spot market. Now, I can go out in the spot market right now, as you can, and on the over-the-counter market in the UK or anywhere in Europe, and I can buy a lot of spot silver. It's a paper position. Nobody realizes whether that's going to be crystallized into physical or not. So these guys are out there buying all this physical, locking in the price. It's just a number until it actually is crystallized. It's not transacted. So it just sits there. In the meantime, they're hedging that position on the COMEX, and you see all the shorts appearing. And so the COMEX-centric guys in the casino see all these shorts coming in, but don't see the long side of that transaction. And this, to me, is exactly what's going on. And this tells me what a screaming opportunity this is right now, when we've got production being completely eaten up into 2022 for silver. How can you have a price? The price today has to be a screaming buy. What do you think?
When you say that Standard Charter bought, you're saying they bought commitments from a mining producer?
Yes, and refiners.
Oh, okay, got it. I was on a podcast yesterday with the CEO of Silver Tiger. I don't know if you're familiar. It's a junior exploration. They're developing a
I don't know it. Yeah.
yeah, they're developing a big silver project down in Mexico, and I think they might have Peru properties also. But he said that based on all the analysis he's seen, there's going to be a silver supply deficit starting next year, like a big one. And he brought up the point that it's not just like, well, you can't even with oil pumps, you can't just shut them down and then turn them on right away. But with physical supply of physical gold and silver, it takes at least 10 years to develop a mine. So it's not like if you've got a supply deficit and the demand is growing. And with silver, obviously, as you point out, what makes it more interesting than gold is that it's got the industrial demand component. I mean, the economy doesn't operate without silver, right? Or it doesn't operate as efficiently or as well without supplies of silver readily accessible by auto producers, technology manufacturers, the whole thing. So defense companies. I mean, I've been kind of thinking at some point down the road, if the supply of silver becomes scarce enough, you could well see, like the U.S. Department of Defense declare it a strategic metal because they need it for their weapon systems. So, so he was saying, he thinks you're going to see for the next 10 years a supply deficit. And, I think 10 years is kind of that kind of thing because who knows for sure. It could be longer, could be shorter. I don't know. I mean, if you go into a big global depression, it's going to reduce the demand for silver. Not the investment demand per se, but certainly the industrial demand component. Another big trend that we think is going to emerge is that you're going to start to see companies. It's not going to be as easy to source silver in London the COMEX and the CME. They acknowledge they're not a true physical market. And you start to see a lot of industrial users go directly to the miners to lock in supply. And I think that's happening now to some extent. We know it is with gold, right? The banks have supply contracts with Barrick and Newmont.
Yeah, that's so interesting because silver has always been the Achilles heel, hasn't it? And
yeah,
for the paper guys, and this is, I think, one of the reasons I and many people and like Chris and everyone that's Andy, we're all kind of focusing on the silver market because it not only is it probably the best investment relative to anything else on the planet right now, and so undervalued, and after 50 years of paper dilution, but it also is as you say, it has an industrial element to it as well. Now, if we've got these shortage, if we've got supply being eaten up by the investment guys, by the Standard Charter, for example, just one bank. I mean, and of course that they're not the only ones, of course. They're never going to sell a single ounce. Not a single ounce will ever come out. And obviously, that's not what they're buying it for. They're buying it knowing that the price of silver should be 50, 60, 70, 100, whatever. They know that. And I think, but what happens, I guess the question is, and I think Ted Butler's raised this years and years ago, is that, well, hey, what happens when Nokia or what happens when Samsung or these guys suddenly want just in time? They're on a just in time supply, right? So, these wholesale bars, and one thing that the banks have been really good at is making sure they never, ever missed a delivery. Otherwise, these guys would just shut down an assembly line. They'd be out and they'd literally buy so much silver, it would spike the market. So it's interesting that, and then when we were in our vault a couple of weeks ago, I picked up a 1,000-ounce bar, and it was said to me, Hank, do you realize that 1,000-ounce bar will make 600 electric vehicles? I think, it never occurred to me actually before. And how many tens of thousands of electric vehicles are coming out? where's this supply going to come from and at what price?
Well, I mean, ultimately, price regulates scarcity, right? So at some point, we're going to see much higher. I think higher prices, especially for silver, than most people can imagine is possible right now. Because how else are you going to regulate the supply and demand of silver?
True, and I think that again another thing is I've noticed that is that a lot of big money is buying. You mentioned coins. I don't really focus on the gold coin side of things, but what blew my mind is how many big investors are saying, okay, yeah, I can get $1,000. Yeah, you can give me 1,000-ounce bars cheaper. I want 1 ounce coins, and literally we're talking pallets and pallets of 1 ounce silver coins because. Why? Because a 1 ounce silver coin is something you can spend.
Fungibility, exactly.
And are you seeing that? Are you in the silver market as well as the gold market, or what do you see?
Well, I mean, basically the same thing everyone else is. I haven't personally bought silver since it was under $20 a couple years ago, I guess. But it's funny because I was just last week I was saying to myself, I probably should start buying some more physical silver because it's going to start getting more scarce and the premiums are going to go a lot higher. One of the theories that I have, I mean, I've never heard anyone else really talk about it, is that you hear about how all of a sudden these mints have shortages, right? Well, there's not a shortage of silver out there. I mean, why can't whoever supplies the mint, why can't they just take delivery off the COMEX, load bars out, and refine them into the blanks that they use to make coins? So it's not like there's a shortage of silver that can't be, silver is so short it can't be supplied to the mints. What I think happens is that when you see these shortages, and we saw them, in March, April, and the summer of 2020 as well, and we know that I think the LBMA was, like, he would know more about it than me, but I mean, was within a hair of defaulting back then, and that's when they conjured up this ACE contract. But I think that one of the signs that you're seeing when there's a shortage in the wholesale market for the big boy buyers, I think what they do is they divert supply that might otherwise go to the U.S. Mint, the Canadian Mint, the Perth Mint, because they need that supply to avoid defaulting into big boy buyers. Because, as you said, the banks have been very careful not to default because the minute a bank defaults, everyone's going to know about it, and you're going to see gold and silver futures go limit up. And they'll shut it down for the day, and the next day they're going to go limit up. Because at that instant, everyone out there is going to realize that everything that people like us have been saying for the last 20 years about the manipulation scheme and about the supply and demand dynamics is true. It's going to be one of those slowly, the Hemingway slowly, then all at once dynamics. And that's why they're careful about not defaulting. And I think that's also why you see from time to time these mints say, we can't produce anymore right now, because they're diverting that supply that would otherwise go into the retail distribution system so that the banks can supply the big boys.
Yeah, bang on. And as you say, there's so many ways of stopping this supply hitting where the rubber meets the road. For example, over the years, and especially in the last 2 or 3 years, if we want to buy a large amount of silver, and we know UBS has got some silver, or JP Morgan's got some silver, and we can get some, but if we start to place too large an order, a red flag pops up, and you get warned, you do this, we'll cut you off. You will not get another ounce. And this has happened multiple times. So what we do is we obviously spread those orders amongst different banks. And but even if you go to a refiner, one of those banks, Standard Chartered probably in many cases, but in one of those banks also have the gold accounts or the silver account, the bank account for the refiner. and or the producer. So you even try and get around that system, and they go, hold on a minute, this is all going to one supplier. Now, I've gone to the LBMA, this was 10 years ago. I remember going public on this, and I said, right, supply me 1 million ounces of silver. I was challenged to do it. And so I said, I went to the LBMA, and I spoke to Simon Weeks, the LBMA, and I said, I want 1 million ounces of silver. Who are you? Where's your balance sheet? I want to see who you are. No, hang on a minute. I've already bought the spot. I want to convert it. No, we're not selling this to you at all. Hang on a minute. You're an LBMA. You've just set the fix in the LBMA, and I've just come to you at the fix and said, I have the spot price. I'll pay a premium. No, we're not selling it to you. You've got to get, I want all your balance sheets. I want all your history. I want everything about you. Come on. So yes, they do control it. And if we do too large an order, even the second tier banks that we go to in Europe, they say, hang on, don't, we can't take that order because we will be red flagged ourselves, and they'll cut us off. And so UBS particularly manage the amount that you can even buy yourself. And you have to be very sneaky to get it yourself.
Yeah, and I think at some point, I mean, it's like the way that they're trying to control the market is it's kind of like a Rube Goldberg machine, right? And at some point, it's gonna backfire on them, and it's just gonna explode. Like I said, I think we were really close to seeing that in March and April of 2020.
Yeah, I think you're right, and we've come close to it. And March 2020, as you say, how ludicrous that was when no physical was flowing, and physical was supposed to be thousands of tons of silver supposedly flowing into the SLV. Impossible.
Right.
Totally impossible, and logistically impossible. I mean, we bring stuff into a vault. It takes a full day to bring 20 tons in, let alone, you've got to weigh each bar. Yes, okay, maybe you don't have to weigh all the bars anymore because, you can trust the weights, or you do have to kind of do audits, and you have to move these bars and stack them. And it's like, and in a European pallet, yeah, you can see they're all laid out evenly, but some of the other pallets are stacked on top of each other. So you have to move the bar to get the bar number. They're not all on the ends like the Mexicans do, so it's impossible to see thousands, tens of thousands of bars, wholesale bars entering and being, who the hell is entering these into the system? I mean, it's impossible.
Well, I mean, speaking of SLV, I mean, we know what the game is there. When silver's moved into SLV, it's nothing but a computer keystroke saying, okay, this unallocated gold sitting over in this vault, that's now SLV's, or silver sitting in, this is now SLV's silver, even though it's already been probably, allocated on an unallocated basis to 10 different other parties.
Yeah, and you can short SLV.
Right. Well, and that's another theory that I've had for quite some time. I did a paper on GLD. I kind of piggybacked the original work that James Turk did. I don't know if you remember when the S1 was filed for GLD, he went through it and said, no, this is a Ponzi scheme, and it pointed out why. And he hit on, a bunch of points, and then I read through the prospectus, and I was, and this was a few years later, and I was like, holy cow, 20 years, and this would have been 2008 when I wrote the paper, 2009. I was like, 20 years ago, the SEC would not have approved this S1 for IPO because there were so many legal loopholes in it. And I kind of concluded in that paper that one of these days we'll wake up and we'll see the price of gold $200 higher, but the price of GLD will be down 50% because, again, it's one of those things where, someone defaulted somewhere, everyone knows about it, and it's like, the worst nightmare scenario that the gold bugs have been painting for the last 20, 25 years. I didn't believe it, but now I know it has to be true.
Can people find that sounds so interesting. Can people find that paper on your website?
I don't know if I have it posted on my current website. What I've been meaning to do, what I'd like to do is go through it when I have some time and edit it and update it, because there's been changes to the GLD prospectus that have made it even looser, and same thing with SLV. And they, they've made it even easier um, for the trusts to be held unaccountable, especially with regard to the sub custodian, operation that they have going on. And I don't know if you saw it, but for a while, Chris Marcus was all over SLV, and he would call him every day and say, "Look, where's that audit? I want to see the real audit report. Where is it? It doesn't exist. They can't give it to him because it doesn't exist." They give him, what they do is they refer him to a place on the website where there's a half-assed, goofy, bar accountability report that was done, by some puffer company over in London. So,
What a farce! What a farce! I know we took talked about this about a year ago. We took delivery of a bunch of silver into our Swiss vaults from JP Morgan, and we thought, I know what. Let's see if there's any duplications on these bar numbers that have just come in straight from JP Morgan to us, and let's have a look and see if they're on the SLV list. And then it was only then I discovered there was like 7,800 pages of numbers to go through, and it's not searchable. I mean, how can you audit something if it's not searchable? It must be searchable to somebody. But no, you try and do that search, it's impossible. Absolutely impossible.
and that's intentional.
Yeah.
Awesome. Well, ladies and gentlemen, you've been listening to Dave Kranzler, hedge fund manager and newsletter writer, focusing, of course, on the physical silver and silver mining stocks. And Dave, thanks a lot for sharing your insights into the silver markets. And please tell our viewers where they can find you.
Well, first, Andy, Shane, thanks for having me on. I mean, it's been a pleasure, and it's good to see you. Even though it's virtually face to face for the first time, Andy. I mean, you've kind of been a precious metals market hero ever since that infamous hearing, conducted by the guy who was the chairman of the CFTC at the time, Bart Chilton. Yeah, that one went viral for a long time. But my website is investmentresearchdynamics.com, and you can go there and get information about my mining stock journal and my short sellers journal. And then I'm also on Twitter. You can just search under Dave Kranzler. I don't even know what my Twitter handle is, to tell you the truth.
Yeah, we'll put a link up for you, Dave. And may I also say what a privilege it is to have you on. And you are definitely one of my heroes. You've been out there a long time, fighting this battle. You're a real friend of gold and silver. You're helping demystify. Anybody that helps demystify this bullshit market is so welcome. And I would actually
appreciate that.
I can't believe half an hour's gone so quick. Will you come back again?
Sure, anytime.
That would be just a buzz. Thank you.
Anytime, I'd love to.
Thank you so much for coming.
Thanks, guys.